Let's talk about George Soros and bubbles. He's the master of bubbles, so he's got a lot to say about them. George Soros, if you don't know, is this guy, one of the greatest investors of all time. And he also gets a lot of hate because people think he's pulling the strings behind a lot of different political movements. He's been categorized as the evil billionaire. When it comes to that, I don't really have an opinion. Even if he is evil, he's still got good stuff that we could learn from. Not how to be evil, but, how to play bubbles. And I know I already talked about Tesla this week, but I'm going to talk about it again because that kind of relates to this topic. So I'll use it as an example. And of course, this is our article from Macro Ops. So this is a quote from Soros. Typically, bubbles have an asymmetric shape. The boom is long and slow to start. It accelerates gradually until it flattens out again during the twilight period. The bust is short and steep because it involves the forced liquidation of unsound positions. Disillusionment turns into panic, reaching its climax in a financial crisis. So Soros has a lot of great information, super smart guy, but his writing is so confusing. It's not very simple, so let's try to simplify it. Now, one of the best recent examples of a bubble is, of course, Bitcoin. And what Soros is saying is that they had an asymmetric shape. So you can see, when it turned into a bubble here back in 2017, that's where the big hump is. The rest of this looks pretty flat in comparison because even though, we were hearing about Bitcoin back in 2013, 2014, it took a long time to get going. And that's what he means. The boom is long and slow to start. But eventually it does take off. And I guess you could even consider this part, the slow start to the boom. But the crash happens much, much faster. And that's because during the boom, people get over leveraged. They start buying with money that they don't have. Mortgage their house, sell their kids, and pile all that into the market because it's hot. But when you're over leveraged and those margin calls start hitting, you got to sell real quick and you're selling for a big loss. Prices are falling. Winding up takes much longer than it takes to unwind because most of the selling that you see in a crash is forced selling because they were bad positions to begin with. And that's pretty much the general idea of how bubbles work in the most simple terms. By the way, if you're looking to get into stocks that are more similar to this side of the equation before the crash, the huge run up, then definitely check out our explosive stocks checklist. It teaches you all the factors we use to find stocks that are going to explode higher. And you will often see those parabolic moves that you see in Bitcoin. Not to that extent because it's a single stock, but you still get really solid returns. So there's a link down below in the description and comments for you to get this. It's for free. Going back to Soros. Every bubble has two components, an underlying trend that prevails in reality and a misconception relating to that trend. When a positive feedback loop develops between the trend and the misconception, a boom-bust process is set in motion. The process is liable to be tested by negative feedback along the way, and if it's strong enough to survive these tests, both the trend and the misconception will be reinforced. This is where Tesla becomes a good example, because if you see the right side of this chart, it's exploding. Now, of course, we don't know for sure if it's going to be a bubble, but based off this recent action, yeah, it looks like it'll run up really high and then crash pretty hard. But who knows? Maybe it keeps going and just flattens out at a whole new level. But let's use it as an example to explain what George Soros is saying here. So the first thing he's saying that a bubble needs is an underlying trend that prevails in reality. So for Tesla, what would that trend be? The move to electric vehicles, right? It is true that Tesla had a major impact on the entire industry. So if we take it at a very basic level, yeah, that company does have value, right? But just that trend isn't enough to create the bubble, right? There needs to be a misconception relating to that trend that really fuels things. And with Tesla and Elon, that's pretty easy. Elon is a social celebrity icon now. So if you look at Tesla objectively, yeah, it's amazing what they've done, but they're also really struggling financially. The financials don't look great. But that is kind of thrown to the side because people start extrapolating what Elon is about to do. So okay, it started with electric cars, and now it's been extended by people, and Elon himself, of course, that okay, it's batteries, so renewable energy, solar panels because they combined with Solar City, self-driving cars because they're the furthest in that, and then a bunch of other stuff, right? And as I mentioned in the last video, everything that Elon does with rockets and tunnels and all his side activities, I think kind of get grouped into the Tesla share price too, to an extent. And then the way the stock is being valued is as if all that stuff is going to happen in the next few years. So I would say one of the biggest misconceptions is the timeline for any of this stuff happening, and also the probability of it happening. Like, these are really tough things that he's trying to do, but people are valuing it like it's already done. So from that misconception, a positive feedback loop forms. Because okay, if people think all this stuff is about to happen, they start buying the stock, you see the stock price go higher, which signals back to those people who originally bought that, oh, I must be right, and signals to other investors like, hey, something is happening. So again, as the price of Tesla gets higher, it becomes even more attractive. More people pile in, and that positive feedback just keeps happening between the price, the misconception, and the underlying trend. And you start getting this really big gap. So things are priced off the misconception when the trend should really be priced down here. And all this in between between is air, which is why you'll see it collapse so fast on the other side of the equation. Now, during this process, there is going to be negative feedback along the way. And I mean, we've seen that with Tesla, right? He's had enough problems. Just all the bears going after him, short sellers, the government subsidies going away, his messed up launches, his delays, Cybertruck windows breaking. But the thing is, every time the stock price gets through those things, the trend and misconception get reinforced. Once again, a positive feedback loop. So it's like, oh, Elon bounced back from that, he bounced back from that thing, and the other thing, you know, he must be the best. And that gets clearly reflected in the share price. And again, here, I'm not saying he's not the best. I'm a big Elon fan myself, but this is how bubbles are formed. Now, this positive feedback loop that we got going, it's self-reinforcing, which is what a positive feedback loop is, right? It can't go on forever though, because eventually market prices become so far removed from reality that market participants recognize them as unrealistic. When that tipping point is reached, the process becomes self-reinforcing in the opposite direction. So that's what I was talking about the big air gap between the actual realistic trend and the misconception. So you can think about it like Wile E. Coyote, when he runs off that cliff and then he's hanging there for a moment before he looks down and puts up that little sign and falls. They're running off the cliff completely. And then all of a sudden one of them looks down and is like, oh crap. And the rest of them look down and they all start falling. And that's when you get that violent crash. Because yeah, I know I always talk about how much fundamentals don't matter in a lot of these cases. And that's true on the run up. But when the thing starts crashing again, it's going to crash back down to that value level, the actual value. Or at least close to it, because there's no such thing as actual value, but something that's more realistic and objective, and without the crazy sentiment behind it. Speaking of valuation, Soros makes an interesting point here that usually some error in the act of valuation is involved. The most common error is a failure to recognize that so-called fundamental value is not really independent of the act of valuation. That was the case in the conglomerate boom, when per-share earnings growth could be manufactured by acquisitions, and also in the international lending boom, when the lending activities of banks helped improve the debt ratios the banks used to guide them in their lending activity in the first place. So a simple example of this, simpler than the ones he mentioned, was our housing bubble. So even though the loans were bad, the value of the houses kept going up, right? So it didn't matter. So if you did the valuation, you know, of how much one of those mortgage-backed securities were worth, it looked fine. And I guess that relates also back to what I was saying about Tesla. As the share price gets higher, it encourages more people to invest. It's that self-reinforcing feedback loop. So when you're trying to value that, you know, your valuation is not going to be completely accurate. Your valuation could be based off numbers that are already in the middle of this boom trend. So valuation in the first place is one of the causes that leads to the bubble. So like I said, we don't know if Tesla is in a bubble itself, but it's interesting to watch with this information in the back of your head. I'm not saying go short this, because that would be crazy, but I also wouldn't be surprised if prices came crashing down. And today Tesla's down 14% as I record this. We'll see what continues to happen. And if you're interested in finding other stocks that make those parabolic moves, then make sure you get that checklist. It's free, link down below in the description and comments. Just put in your email and I'll send it to you. It's helpful. Might as well check it out. And if you haven't already, make sure you subscribe to this channel and hit that notification bell for more videos like this, where we describe bubbles and other things. Like this video, comment down below with what you think, because I answer pretty much all the comments. And yeah, I'll see you in the next video. Stay fallible out there. Bye.